Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks, so stocks that are paying the highest premiums for covered calls and cash secured puts. Before jumping into this week's scan, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump into this week's high volatility scan. As always, I'm in the Thinkorswim platform on the scan tab, and I'm going to be scanning the S&P 500 to start. Let's go ahead and click scan. Here we have the S&P 500 sorted by implied volatility, and currently the stock with the highest implied volatility is SolarEdge Technologies with an implied volatility of 79%. This is after market data, so it may change when the market opens up again. We can now jump over to the trade tab and see what kind of premiums we could get on SolarEdge Technologies currently. So looking at the option chain here, I'm going to be looking at the 8 days out option. So that would be options expiring next Friday. And we can start by looking at cash secured puts. As always, I have this custom column on the far right of my option chain that shows me the percentage profit for selling a cash secured put, and it also gives you an estimate for covered calls right here. If you're interested in adding this column to your own platform, check out the link in the description that has a free download on how to add that to your own platform. Now, looking at the column right here for cash secured puts, you could sell the $84 strike price and make about 1%. And the stock is currently trading at $96, so that's about $12 away. And if you did sell this put option, you could make about $85 in premium in 8 days, or about 1.04%. If you did end up getting assigned on this position, so if the stock price closed below this strike price at expiration, you would need 84 times 100 because 100 shares per option contract, so $8,400 in order to buy 100 shares of the stock. On the covered call side, it would currently cost you $9,632 to buy 100 shares, but then you could sell the $97 strike price for about $490 in premium in 8 days. The percentage profit isn't loading here, but if I refresh, it might load, but that would be $490 in premium collected. Let's go ahead and jump back to the scan tab and look at a couple more. We have Paramount, Enphase, Walgreens, all a bunch that we typically see at the top of the list recently. We have CarMax. We can check what kind of news CarMax has. CarMax does have earnings coming up in a week. Typically when earnings are close, volatility will continue to increase up to the earnings date. And let's go ahead and take a look at this one. So current volatility of 54%, earnings on the 21st, and currently trading at $75. Jumping back to the trade tab. And here we can see the percentage premium column has loaded all of the potential profits from selling cash secured puts. If we wanted to make about 2%, we could sell the $69 strike price. And if we want to make about 1%, we could sell the $65 strike price. That would allow us to collect about $55 to $60 in premium. And if we did end up getting assigned on this position, we would need $6,500 to buy 100 shares. On the covered call side, it would currently cost $7,500 in order to buy 100 shares, but then you could sell the $76 call option and collect about $320 to $330 in 8 days, or about 4.34%. Important to keep in mind with stocks that have earnings coming up that because of earnings, there is increased volatility and the stock could potentially drop lower and you could have losses from the actual stock, whereas you would still collect the call option premium. Jumping back to the scan tab, and feel free to pause the video and take a look at the full list of stocks on this scan. I'm going to go ahead and do one more on the S&P 500 list. Let's see if we can find a slightly cheaper price stock. Keycorp is one that we haven't looked at before in previous videos, so let's go ahead and take a look at this. I'm not too familiar with what their actual business is, but they have an implied volatility of 46%, and their current price is $14.77. And if we look at their current chart, we can see that they've kind of been going up and down recently, as high as $87 and now trading at about $75. Jumping to the trade tab now, we can look at their option chain, again 8 days out, And here we could see we could make about 0.54% selling the $14 strike price, about 70 cents away from the current stock price. That would give you a premium of about $5 to maybe $7. And your risk here, if you did get assigned, is you would need $1,400 in order to buy 100 shares. On the covered call side, you could buy 100 shares right now for $1,477, and then you could sell the $15 call option and collect about $20 in premium. Jumping back to the scan tab, just for fun, let's go ahead and look at the S&P 100 as well. So this would be the top 100 stocks in the S&P. Go ahead and click scan, and here we have Walgreens at the top of the list. So this is the top 100 stocks in the S&P 500, and the top stock here is Walgreens with earnings coming up January 4th. Let's go ahead and make this the last one that we look at. As always, feel free to look at the whole list that we have here as well. Jumping back to the trade tab. Again, the 8 days out options. Here we can see that you could make about 1.22% selling the 24.5 strike price, or you can make 0.67% selling the $24 strike price. That means you would collect about $15 in premium, and the risk, if you did get assigned, you would need $2,400 in order to buy 100 shares. On the covered call side, you could buy 100 shares for $25.14 per share, or $2,514, and then you could sell the 26 or 25.5 call option. Let's just look at the 26 for now, for about 1.13%, or about $28 in premium. If you have any questions or comments, feel free to leave those down below. And if you enjoyed this video, don't forget to like and subscribe, and I'll see you all in the next one.